Understanding registered investment advisors, RIAs registration, duties, and services. Registered investment advisors, RIAs, play a crucial role in the financial ecosystem, offering advice and guidance to individuals looking to grow their investments. To understand the importance of RIAs, it's essential to be well informed about their regulatory requirements, fiduciary responsibilities, and how they operate. SEC registration. One of the key functions of RIAs is registration. Depending on their assets under management, AUM, and the jurisdictions they operate in, RIAs are required to register with the Securities and Exchange Commission, SEC, or state regulatory bodies. Key registration points. AUM thresholds. RIAs with more than $100 million must register with the SEC. Those with AUM between $25 million and $100 million generally have the option to register with either the SEC or state regulators. Smaller RIAs usually register at the state level. Annual updates. RIAs are required to update their registration information annually, filing the SEC Form ADV, which requires detailed information about their investment style, fee structure, and any disciplinary history. Disclosure obligations. Transparency is a critical aspect of an RIA's operation. RIAs must disclose any risks associated with their recommended transactions and ensure clients are fully aware of potential conflicts of interest. Assuming the burden of proof. If questions arise regarding an investment recommendation, it falls on the RIA to prove that risks were disclosed and that the investment serves the client's best interest. Fiduciary duty. RIAs are obligated to act as fiduciaries, which means they must place their clients' interests above their own and avoid conflicts of interest. This fiduciary duty fosters trust and aligns the advisor's incentives with those of the client. Compliance and documentation. Compliance requirements mandate that RIAs adhere to SEC and Financial Industry Regulatory Authority, FINRA, regulations. This includes extensive documentation and record-keeping to ensure adherence to regulatory standards. How to register as a registered investment advisor, RIA. Registering as an RIA is a structured process. Filing Form ADV. This is the main registration form for investment advisors, required by both the SEC and state authorities. It includes detailed information about the advisor's services, fees, and practicing history. Disclosure of information. RIAs must disclose their investment style, AUM, fee structure, any disciplinary actions, and potential conflicts of interest. Public availability. The information on Form ADV must be updated annually and made available to the public for transparency. RIA versus Investment Advisor Representative, IAR. To clarify the distinction, RIA refers to the firm that offers investment advice. IAR is the individual who gives that advice. An RIA can have multiple IARs or may operate with just one, depending on its structure. RIAs versus broker-dealers. Understanding the difference between RIAs and broker-dealers is essential. Advisory services. RIAs provide comprehensive financial advice, while broker-dealers typically focus on executing trades. Fiduciary standard. RIAs must act in the best interests of their clients, whereas broker-dealers follow a suitability standard, which may not always prioritize the client's best interests. Conflict disclosure. RIAs are required to disclose any potential conflicts of interest, providing a higher level of transparency. Revenue models for RIAs. RIAs adopt several fee structures, which can include management fees, charged as a percentage of AUM. This incentivizes advisors to enhance portfolio values. Performance-based fees compensate RIAs based on portfolio performance, restricted to clients meeting specific wealth criteria. Asset class-based fees, variation in fees based on the type of asset managed. Hourly or flat fees, some RIAs charge based on time spent or offer subscription models for advisory services. Selecting a registered investment advisor, RIA. Choosing the right RIA involves thorough research. Regulatory background. Consult the SEC's Investment Advisor public disclosure site to verify registration and history. Services offered. Evaluate the array of services to ensure they align with your financial needs. Advisor qualifications. Look into the skills and qualifications of the IARs associated with the RIA. Benefits of working with an RIA. The advantages of partnering with an RIA include legal obligation to act in your best interest, ensuring personalized service aligned with your goals. Transparent fee structure, typically based on AUM or flat fees, minimizing conflicts. Comprehensive financial planning. RIAs often provide a broad range of financial services, from investment advice to estate planning. Conclusion. The demand for RIAs continues to grow, with a significant portion of the market projected to be managed by them in the coming years. Whether choosing a traditional RIA or considering robo-advisors, automated tools providing algorithm-driven advice, investors can find tailored solutions to meet their financial needs. By understanding the regulatory landscape, fiduciary responsibilities, and the variety of services offered, clients can make informed decisions when selecting an investment advisor.